I'm about to drop a strategy on you that's shockingly simple. You might even be thinking, this is way too easy. No way it actually works. But seriously, sometimes simple is best. In fact, there's this thing we say in the trading world. Just keep it simple is stupid. Hi traders, welcome back to the TradeGenius channel. Now we're talking price action, which, let's be honest, can sound kinda fancy pants. But we're gonna bring it down to earth. We're even using a couple of indicators. Think of them as training wheels, just to make things extra smooth. So even if you're brand new to this whole trading thing, you can totally get this. I'm about to spotting these key moments in the market, those little whispers the price is telling you. And this strategy is like a decoder ring for those whispers. No complicated formulas, no PhD in finance required, just pure, simple, hopefully profitable trading. Alright, now let's talk about uptrends. Imagine a stock price steadily climbing. That's the basic idea, but it's not a straight line up. It's more like a staircase going upwards. Each step has a high point and low point, and in an uptrend, each high is higher than the last, and importantly, each low is higher than the one before. It's like the price climbs, take a little breather, then climbs even higher from a new, higher starting point. Now, these climbs and breathers have names. We call the strong upward pushes impulsive waves. These are those excitement moments when the price jumps, driven by lots of buyers. They create those higher highs. Then the price takes a little dip, a corrective wave, as some traders take profits or things just consolidate a bit. These dips are smaller than the impulsive waves and creates the higher lows. So it's a constant cycle of push and pullback, but with each cycle reaching new highs. This creates the upward staircase pattern, confirming a healthy uptrend. Downtrends are basically the opposite. Instead of a staircase going up, it's going down. The price is constantly declining, but not a straight line. It's a series of lower highs and lower lows. Each peak is lower than the previous one, and each valley is also lower than the last. Just like with uptrends, we have impulsive and corrective waves, but now the impulsive waves are strongly downward pushes driven by sellers. These creates the lower lows. Then we get brief upward bounces, the corrective waves, before the price continues its descent. These bounces are smaller than the downward moves and creates the lower highs. Alright, so you want to get a quick read on the market's direction. We can use a couple of tools to help us out. Let's talk about moving averages first. We're going to use two in particular, the 200 period EMA and the 50 period EMA. Think of these lines that smooth out the price action, giving us a clear view of overall trend. When the price is hanging above both of these lines, we generally consider that an uptrend. If the price dips below both lines, that's usually a sign of a downtrend. Simple enough, right? Now we're going to add another indicator called higher high, lower low strategy. Don't worry, we're going to tweak it a bit. In the settings, we're going to adjust the left and right bar calculation to 9. We're also going to hide the lines the syndicator draws because we don't need them for what we're doing here. I'll explain why we add the syndicator in just a bit. Alright, let's talk about trading with the trend lines, but with a twist. We're not just drawing any old trend line. We're focusing on corrective trend lines. This means we're drawing our trend lines during those little pullbacks or consolidations, those corrective waves, whether we're in an uptrend or a downtrend. This way, we're always trading with the overall market direction. So imagine we're in an uptrend. We see the price action above our 50 and 200 EMAs, or we're spotting those higher highs and lower lows. Now we want to draw a trend line. We're looking for a lower high after a higher high. Those 2 points, the higher high and the following lower high during the pullback, are where we draw our trend line. Now comes the exciting part. We wait for the price to break above this corrective trend line we just drew. We need confirmation, which means waiting for a candle to close above the trend line. Once we get that confirmed breakout, boom, we can consider opening a buy trade. For risk management, we place our stop loss just below the higher low. And our take profit target, a common strategy is to aim for 1.5 or 2 times the risk we're taking. No worries if you didn't click right away. Let's walk through some more examples. Remember, we're focusing on trading corrective trend lines. So we're on an uptrend and we wait for the next little pullback, the next corrective wave. We spot a new higher high followed by a lower high. We draw our trend line connecting these 2 points. Then we patiently wait for the price to break above this trend line. Boom, confirmed breakout. Time to consider a buy trade using the same stop loss and take profit rules we talked about before. Now let's say we get another corrective wave. We draw our trend line, but this time something interesting happens. The price doesn't break the trend line. This is a key signal. It could mean that uptrend is losing steam and we might be seeing the start of a downtrend. It's a sign to be cautious. Okay, let's switch gear and look at the downtrends. We now see a lower low in the market and the price is below both our EMAs. So we're looking for a corrective wave within this downtrend. We find the lower low followed by a higher low and we draw a trend line connecting these 2 points. Now we're waiting for a bearish breakout, meaning the price breaks below the trend line. Once that happens, we can consider opening a sell trade. Our stop loss is slightly above the higher high and our take profit follows the same risk to reward ratio as buy trades. So whether it's an uptrend or downtrend, the principle is the same. We're trading breakouts of corrective trend lines in the direction of the main trend. Let's say we spot another corrective wave forming. We draw our corrective trend line just like before and guess what? The price breaks out and it's turned out to be another profitable trade.